I'm joined by Anil Rego, founder and CEO of Right Horizons. Anil, hi, good evening. Welcome to the show. And let's begin the live financial planning session. And I think we have Sreekanth's question first. And okay, that's an email query. And he says that he's 43 years old, been investing in real estate for the past 15 years, which has increased his net worth to almost 4 crores with no active loan. So, congratulations over there, Shrikant. But 3 months ago, he began investing in mutual funds, and he also has lined up few goals. Child education, he is saving for 13-year-old son education, aiming to accumulate 1 CR in next 4 to 5 years. He plans to retire at 50 and aims at building a corpus for the same purpose. He's an SIP of 30,000 per month, allocating 5,000 each to UTI Nifty 50 index, SBI Nifty 50 index, next 50 index, and UTI Nifty 200 Momentum 30 Index, Bandhan Nifty Alpha 50 Index, Tata Nifty Mid Cap 150 Momentum 50 Index, and JM Flexi Cap. He wants you to review his investments and investment strategy. Is it aligned to his goals? And additionally, he's looking to bulk up investment by 30 lakhs in mutual funds. And for that, what would be the recommendation? Okay, so he really looks like a passive investing fan. He just got one active fund and rest all are passive. So congratulations over there. But then a lot of repetition in terms of fund house is also concerned. Even category repetition. Okay, so what will be your recommendation, Anil?
Yeah, first of all, I think it's good that he's been able to build a bit of his, real estate portfolio. I think he's now looking to build his personal finance on the financial assets and especially mutual funds. And I think he started off his journey with mainly index funds. So most of the funds are index funds, and you have one which is not an index fund. I would just like to say that, if you go back and even right now see, you know, uh, the performance of index and actively managed funds, you will probably find that the number of active funds which have done better than the index, and, the NAV is typically post expenses. So, even though you have active funds at a higher expense ratio, whatever you see as the NAV and the performance, then anyway, it's something to look at. So I think it's good to have a combination. In fact, the only fund that he has, JM FlexiCap, if you see, has been one of his best performers among all the funds. So I think that is one of my suggestions, that he sort of looks beyond just index funds. The second is, he has some bit of momentum funds. Okay. And I think momentum funds are doing very well. So I guess one invested based on past returns, and now they are the ones which have possibly fallen the most. Okay, so that is something that we need to keep in mind. One of them is, an Alpha 50, Nifty Alpha 50 index fund, which is not, which sort of also has momentum in a indirect way. So that is something that I would again suggest. How do you look at maybe diversified equity funds for most of you? And when should you invest in such funds? If you are a very high risk investor and you also are able to time, say, a momentum period, okay, then that's the time that you are able to enter. You're also able to exit in time, then do a momentum fund. But otherwise, I think you can go diversify it. And in terms of recommendations, right, and also his goals. If he wants to look at his child's education for 1 crore in about 5 years, assuming a 12% return, he need an SIP of almost like 1.21 lakhs. So that is a sort of a reasonable amount that is required. Again, working back, I've not got a number for retirement. So if you need a lakh a month, then again there you need almost like 3.5 crores in about 7 years is what you assume there. So again, at a similar 12%. Now, so that is something that you know based on the current 30,000, it's if one is going to be short of what is the requirement. But since he has some bit of the real estate, he could use some of the real estate, and then maybe a combination of his real estate coming into financial assets. Why is that important to do at some point of time? Because real estate is illiquid. So if you need to plan for a child education, then and you're running around to buy and sell your property, it's not the best thing. So you need to do that a little early than when your requirement is. And in terms of funds, now coming back to the funds and the recommendation, I think he can use some bit of his real estate. Of course, he should set aside his own house. So if the foreclosure is only his own house, then I would not consider anything. But if his house is part of it, again, what is the remainder or the full, depending if it's not his house which he's living in, right? Because that's a need that is required. And coming back to his funds, then maybe I suggest using some of the real estate, and 1 lakh of SIP is maybe what he can start off with. Continue with the first two funds, which is the index funds that he has, and for the rest of it, I'm suggesting that he can add ICICI Pro large and mid cap fund, and also so he is in the large and mid cap category. Uh, JM Flexi Cap he already has. So SBI Nifty Index 50 again, that also he has, and HDFC mid cap opportunities is something that he can also come in and add to his portfolio. Now the other point is because of his need is like child education, and it's in about 4 years. I want to be a little conservative also in one fund and suggested maybe a HDFC Balance Advantage fund. And of course, if he it doesn't need the if he's able to take a high level of risk, then he can go back and add it into one of the other funds. But I think combination of this takes care, of risk as well as any unforeseen up and down will, HDFC Balance Advantage will take care of it, but the rest of them will help him grow as well.
All right. That's a recommendation for Sreekanth. But then I have Mr. Rajappan on the phone line with me. Hi, good evening, sir.
Good evening, madam.
All right. So as per your details sent to us, sir, you have 70 lakhs and you're retired, looking to invest for 5 years. Sir, I want to know, is this your retirement corpus from which you would want money for your day-to-day expenses, like in every month income from this particular investment?
You are right.
Okay. And how much would that be? What is your every month requirement then?
It will be something like 40,000 rupees.
40 to 50, you said?
40,000 per month.
30,000. Okay.
20.
Okay. Okay. I also want to understand, so you will be investing now, okay? After how many years would you need this money from this investment? After 5 years?
After 5 years only, that's correct.
After 5 years, right.
Yeah.
Have you been investing in equity already?
Yeah, I am already there. I am directly investing.
Okay, direct investing. So you already have funds, that means, in your portfolio, is that right?
Yeah, I have. From that 20 lakhs, another 50 lakhs in direct equity.
Okay. All right. So let's help you with this particular investment of yours. So Anil, 70 lakhs for 5 years invested, and then after that, every month 30,000.
Yeah.
So I think it's good that he has some space there, and he already has some experience to investing, in mutual funds, and he's also doing direct equity. It looks like so I think that's nice. For a requirement where you need monthly income, one has assumed that one will need to be a little conservative there. So and especially when one is in retirement, I think this is why I'm suggesting, let's say, something like a HDFC Balance Advantage Fund, which is a dynamic asset allocation fund. What it does is the ratio between debt and equity is determined, based on certain factors, and basically coming back to market valuations, right? So we have different ways of valuing markets. So when markets are high, it goes into debt, and markets are low, it goes into equity. So the dynamic asset allocation makes it less risky, because when markets are high, you are more to debt. So when the fall happens, you fall lesser. And it also takes advantage of opportunities when markets are down, because that time the equity is high. So I think that can be one of a core thing for any investor who's looking at retirement and after some time, and also wanting to beat inflation and stuff. The second thing I've done is gone slightly even more conservative in the second one, which is ICICI Pro retirement fund, and I've used a hybrid conservative plan, and that is something that also he can use. And Nippon India large cap, I've kept it for growth. Okay, now this is something I at that time we didn't know how much he wanted to take on a monthly basis, but since the amounts he's spoken of, I think it should be good, and he can continue to do the large cap fund. And in worst case, maybe when he's closer to this 5 years, he can switch over to maybe a dynamic asset allocation fund like a HDFC Balance Advantage or any other fund. He can also move to a debt fund at that point of time. So this is my suggestion for him, taking care of beating inflation, and at the same time being careful not to take excessive risk for him.
All right. With that, I think it's a wrap on the show. Thank you so much, Anil, for taking time out and answering our viewer queries today. And for all the viewers, you can also send across your question. You can WhatsApp us your queries and also email us your questions. Thank you so much for watching. Bye.